so much, Karen. I'm so happy how did this chance to introduce this kind of tax knowledge with small business owners. Okay, let me share my screen. Okay. Okay, so I believe you can see my screen, right?
Yes, yes.
Okay, perfect. Okay, um, before going, I would say something about myself. I'm Cathy Yuan, a CPA, CGA, a certificate internal auditor as well, and I'm a founder of OSA CPA Professional Corporation. And my main working is, working with the CRA for some taxpayers tax issue audit or some penalty, this kind of problem. Also, I provide this kind of consulting to small business owners. Okay, then for this webinar, I want all the business owner can know that the basic knowledge on GST HST. For example, when we have to register this tax account, and I want to. You want to know what is the tax rate and how I know which input tax credits are eligible, how to claim, and that's how I can prepare the basic return for GST HST. That is the main topic what I want to share with all you guys. Okay. Mhm. Uh, the GST HST is a tax collect through the supply chain. It's different from other tax. For example, we have personal income tax or corporation income tax. All that tax is based on income. You have the income, you have expense or expenditure, then you got the profit. Based on the profit, you have to pay tax or carry forward the loss. But for GST, HST, it's a different story. That is, when we sell something, we charge the GST from customer pay. Then in order to get the income, we needed to buy tools, we have to buy equipment or some office supply. Then we pay to our vendors. We pay the tax. Then total collected sales, we get the tax from customer minus we paid input. The net is the tax we should pay to CRA. And that is to say, even though we have no income, but we paid money, we paid the tax to get things to support the business. Then we have to pay the tax or even claim the tax refund. So it's a different tax we need to understand. So I would think that is a kind of very good tax plan tool for business owners. Okay. Mm-hmm. That is to say, you can see collect tax is not revenue. That is once we collect the tax, there is a liabilities we needed to pay CRA in the future. But we have, we also pay tax. We have the credit can be net from the collect tax. So, yeah. We have the threshold that is 30,000. Even you are in quarter or that is accumulated in 4 quarters. For business owner, it will be a little difficult for you to understand. So I'm not suggest or recommend it. Just analysis when I um, have to resist GST HST account. Instead, you just remember this 30,000 that is, we can have the plan to voluntarily resist this tax account instead of have to. I will explain the reason in the following slide. That's why we can voluntarily open this tax account, you know. hmm But remember, there has 30,000. That is the threshold. That is mandatory. We have to. That is, we have to. Okay. hmm Okay, that is voluntary. CRA provides two options. One is mandatory, we have to. The other is voluntary. I want to see more on this voluntary registration because, as I said, it's kind of very good tax plan too for the business, special for some a new business because we can see that potential benefits. That's a recovery eligible GST HST input tax credit. Also, it's a wide rush, a hurry change. We grows across the threshold. We don't have spent lots of time to know, oh, that is today the revenue over 30,000. Oh, hurry, hurry, hurry. We have to resist or we have to contact CRA that has mandatory requirements. If we voluntarily resist this tax, we don't have to, very, very rush. Okay. Also, we can appear more established to some customer. That is to say, if you issue the invoice to customers or you charge the GST HST, that's to say, okay, this business is very stable. It's that has voluntary resist to say to certificate this business is a stable business. Build trust to customers. But that has the benefits. Also, there must have some cost and risk. One of the big costs is to charge tax on taxable supplies. That is, you have charged more money from the customer. Customer may have to pay more. Yeah. The other thing is very, very important is that even though you business, haven't got revenue, didn't issue invoice, and all the activity is new, but you have to do the tax return. Yeah, because from CRA points of view that you have this tax account open, you have to do the tax return. That's the big thing business owner should be considered before voluntary raises this tax account. Okay, that's I want to highlight. One more thing is that once we open this tax account, we have to maintain records and, remit on the time. That is, we open this tax account, maybe monthly or quarterly or annual. We have to maintain the records accounting accordingly to the period, then do the tax return. Okay. And for the GST HST, we have different tax rates. maybe zero tax or exempt. For zero tax, we also needed to, do the tax return. For exempt, we maybe, for some nonprofit organization or something special goods, we don't need to, charge. But oh, sorry, that we needed to charge, but the rate is zero, even though there has no tax. Okay. Mhm. Uh, for the rate, I know some business, the office is in some location, but operating maybe in another province. We needed to identify what it is supplied and when it is supplied under the rule and confirm the current province rate. Different corporation has different rate. Okay, I can see there has a read. Okay, can you see there has the current read?
Okay. Yes, it's a little bit small, but yeah.
Oh, small. Okay, I can get a bigger. Yeah, can you see this Ontario is a 13 or other province it's different. Nova Scotia maybe 15 is different. Okay. Mm-hmm. So just check before issue the invoice. Okay, let me continue. Um, After voluntary or mandatory register GST HST tax account, the most important thing is for the ITC. ITC is input tax credit. That is way by thing for commercial needs. Everything we paid, we needed to collect these ITCs. These ITCs will be credit to minus from sales tax that is reduce our GST HST tax amount, even to refund from the CRA. So that is, I recommended the most important thing. Everything we bought from Wonder, from some online Wonder, we always ask them to provide invoice. It's not receipt because receipt that is only the total amount. We don't know what is we paid for the goods for the service, what is we paid for the tax. So that is important. We need to collect the invoice. The invoice format, you can see that's a supplier's name and a GST HST account. That is the 9 digital number. That's a business number and followed by RT. RT is the meaning of GST HST account. Only you see this number that oh, this supplier has a GST HST account. Or maybe if there has no this number, maybe they just charge you extra money. They didn't pay the tax. You know, yeah. So, and you can see this HST followed by the tax rate, maybe 13 or 14 or maybe 15. That's based on the operating province. And the total we pay 1,130, but this 1,030 that we can claim credit from our tax. If we, for the business at the beginning, we didn't have any revenue, we didn't have the sales tax, then we can refund this 130 from CRA. Yeah, so that is the reason I always suggest or recommended my clients voluntarily resist GST HST account because at the beginning, maybe 1 year, 2 year, or 3 years, it's not easy for business to get big sale or big revenue, but in order to get the revenue, business has to spend lots of beginning operating. We have to buy a computer, we have to buy ATM machine, or we have to design website. Lots of investment. This kind of investment we can collect ITCs, input tax credit. They may be big amount at the beginning, first year, second year, or third year. That is, we can collect this tax we paid and minus from the sales tax or get a refund from CRA. This ITCs can chase for 4 years, 4 years. If you resist this GST HST at the beginning of the business, run, then you can collect 4 years. In the fourth year, you get a big revenue. You have, big sales tax. Then you can minus this accumulated ITCs. So that is a big tax to benefit your cash flow because you get a refund from CRA or you reduce the tax. So that is I want to highlight. Mm-hmm. Okay. Uh-huh. Here, that is the eligible GST paid for commercial activities. That's it to say, not all the GST HST we paid are eligible. You can see, usually we look for GST registration, purchase support that is for commercial activities. For example, we bought a computer. This computer is for my personal use. That GST HST is not eligible. We cannot claim from the business. But if this computer is for business use, we use it for email. We design or put some blog in my website, and that is for that's for business. We can claim this GST HST ITCs. Okay, and if it's personal or other, for example, meals. I have the meals with my potential clients or customer. That meals only can claim 50%. That is not all. So there has some different rules on eligible GST HST. We need to check before claim. Otherwise, maybe CRA ask you why you claimed 100% on meals, on hotels, because that is not eligible. We can only charge the percent that CRA agree to be claimed. Okay, that is the way business owners should keep in mind. That is, we always check the eligible GST HST ITCs before submit the tax return. That's important. Mm-hmm. Okay, here that is the tax return calculation. That is only very, very simple how to do the tax return. First line, that is GST HST collect or collectible from the sales. when we issue the invoice, we needed to, list this the goods, service, maybe 100, and we have the GST HST tax. That's 30%. That is $13. That's the GST, and the total amount will go to 3,900. That's the GST HST collect. And the eligible ITC that is introduced before that can be minus from the sales tax. And the net tax to me remit that's the 2,250. That is based on we have the revenue. If we have the revenue for the first line, GST, SST, select or collectible, it's only zero because we don't have, we haven't got a customer. All the 1 year we investment, we have to buy lots of tools, lots of equipment, but we paid about 1,650 ITCs. Then we can get this refund from CRA. That is, we pay tax, but we can get it collect. Okay, it's very good. Yeah, I like it. For my business, I voluntary, open the GST SST account, just have zero revenue. Yeah, that's what I did. Okay, this is another thing that a business owner to be think, you know, in advance. You want to do the GST, HST annual or quarterly or monthly. Monthly, that is you have to do the tax return monthly. Quarterly, that is our 3 months you have to do. Annually, that's just 1 year, 12 months. For my recommendation, it will be annually because, for the business owner, that is just open a small business. At the beginning, they have no lots of time to focus on tax. That is annual will be good because you just saving time and you don't have lots of transactions. Don't have to spend time on that. Okay, for annually, okay, I can also share where is the annually. Okay. Okay, can you see this table that is a filing and a payment deadline? If you register this tax monthly, you have to, 1 month after the period end. But for annual, that is more popular. Three that is 3 months after fiscal year end. That you have enough time to this tax return. It will be very good for the business owner. Mm-hmm. And also, I want to say one more thing important is that this fiscal year for GST is better aligned with corporation tax. If your business is incorporated, the corporation income tax fiscal year end it's better same as GST, HST, because otherwise you have to do lots of reconcile to, do the tax return. Your fiscal year for the corporation income tax is December 31st, but for the GST, HST, maybe April end, you have to do reconcile because the period difference. That is my another recommendation. Okay. Here, that is the bookkeeping, because even though you see that is the tax return maybe only 2 lines or 3 lines or 4 lines, it's very easy, but that number is accumulated. You have to one transaction, 2 transactions, so many transactions can get one number. That's the reason we have to get the bookkeeping. Okay, bookkeeping, that is, oh no, we have the sales, we have the tax according to sales, and we have the expenses. The sales maybe 10 or 20 is not a very big amount, but for the expense will be more. That is, we collect ITCs. So we must have very clear bookkeeping flow. That is, we can get everything recorded. It will be get us, clear to know what kind of expense we paid for the business. Then we can know how many ITCs we collect. Then we can do the good, tax return. For this bookkeeping, I also want to know, whether business owner have this kind of accounting software. If you are interested to do bookkeeping by yourself, I can do something to introduce maybe in the future webinar what kind of free accounting software is good and what kind of charge accounting software for your business. You can choose one, that is, a business owner can choose to do the bookkeeping by yourself, because I know you want to save the cost and you want to, using the money to get more customer instead of this kind of cost. So I can do that in the future time if you want, if you like. Okay. Mm-hmm. Anyway, bookkeeping is very, very important for my customer, for my clients. The clients, I only have the bank transaction. I have nothing, so it's not easy for the CPA to do the tax return, because for the bank transaction, that is the only total amount. There has no ITCs. I don't know how many tax you paid. I have to calculate. If you that's an example. Maybe spend more time. I just want to say, if you only have the bank transaction, it's not able to calculate the GST. It's not easy to do the tax return. We must have the very clear bookkeeping, either from the accounting software or from even Excel, that is list out what is the goods cost, what is the service cost, what is the tax we paid. Then we can know how to do the tax return. That's a business owner must keep in mind. Yeah, it's not easy, but we have to. Okay. Mm-hmm. Mm-hmm. That keep evidence, I want to also highlight, because that is potential CRA may challenge us. That is, why you have the ITC, the remarks, that we claim 1,000 ITCs, but, you don't have lots of sales. Or even, some business owner has more ITCs. CRA will ask you to provide evidence. This kind of evidence may be from different documents, either sales invoice or contract or refunds or credit notes or purchase invoice, that we have the ITCs. You need to provide the purchase invoice to say you have this amount ITCs. It's very, very, very important. Or bank or some credit cards. You said you pay, lots of money to buy tools or equipment or service. How to uh, certified you paid? You cannot say, "Oh, I paid by cash." It's not reasonable because at this moment, not a lot of people like to use cash. Especially maybe you buy these things from other cities or other province. It's always bank transaction or credit card. So CRA will want to cross check that this business is true. That's the reason they want to ask both the invoice and the bank transaction. And for some case, they also want the general ledger. The general ledger that is to all the bookkeeping, then go to the, for example, they have the revenue, they have the expense. The general ledger will say the expense will come from office supply, or some professional or insurance or IT support. This kind of expense details that to certify we have this kind of different expenses to support the business to get the customer, to get the revenue. That's the general ledger. Mm-hmm. Other maybe CRA ask other documents to, the main purpose is to certify that all the tax return based on real transaction. It's easy to understand, but it's not easy to keep this evidence. I can also, give, education my clients. At the beginning, you needed to, support, get a folder to record all the expenditures. I always suggest them to keep a folder that has the folder invoice or sales, this kind of thing, to get them easy to categorize different documents. Once CRA asks this evidence, we will easy to get those supportings, or otherwise it will be very rough, very big stress. It's not easy. Okay. Okay, let's continue. And for the GST HST, all my suggest it's voluntary, but we also have some mandatory, that is late registration. This may be get some penalty. So that business owner think in advance that we avoid this late or wrong rate. Wrong rate, maybe we can avoid to check different province rate. In Ontario, that is 13%. Mm-hmm. That is weak invoice. That, as I talk, that has no tax in it. That is a very weak invoice or receipt. There even has no tax. It's not support you claim the ITC. Or even you send after you register this tax, when you issue the invoice, they only have the goods or service that has no tax. That is not accepted by the CRA. We must clearly list all the tax. Mm-hmm. The other thing is personal ITCs. In the business that is common or more happening is that the business owner, pay the business use from their personal credit card. Also, charge, personal use thing from the business that is must be separate. You know, CRA don't allow personal use charged from ITCs. Also, if business owner or director pay on behalf for business, we business owner must have very clear bookkeeping to say due to the owner. Then in the future, the business owner can get the money free tax from the business. That is a very good benefit. If you combine everything, mix everything, that will be a mess. Okay. Late filing payment. That is, I said, if you choose monthly or quarterly, but you do the tax return after the whole year, you will be get interest or penalty if you have to pay. If you have the balance owing, the CRA will charge your tax interest. But if refund, CRA also will pay your tax. Pay your tax interest. That CRA pay your interest. It's very funny, but that's the real case. Okay, the late filing. For GST HST, it's very good because CRA will always remind business owner after you open this GST HST from CRA My Business account or by phone or website, they know that this business there has outstanding tax return. They will remind you by sending you an email or by mail. After you got these mails, you need to take action to do the tax return. Even you miss that line, they will remind you again. But if you continue to miss the reminder, the CRA will do the tax returns for you. Can you understand what I'm saying? That CRA do the tax return on behalf of you. For example, when you receive this tax return, you estimation the annual revenue, 1 year revenue is about 30,000. Okay, CRA will use this number to the tax return. Then, because CRA don't know you have expense, they don't know you have the ITCs. Okay, ITC is 0. Then you have to pay 30,000 revenue tax. It will be huge amount. I did lots of case like this kind of certification. That is taxpayer, they didn't do the tax return. Then the CRA do the tax return on behalf of you based on their assumption. This assumption is very good for CRA. It's very, very bad to business owner, to you, to us. Then we have to spend lots of time, spend lots of money to argue with the CRA. No, you were wrong. My revenue is 0. My revenue is only 1,000. You was wrong. Then, spend lots of time because, this kind of case, CRA chart is very slowly. They maybe even spend 52 weeks to deal with this kind of case because they have to refund money to you, or maybe you reduce the tax amount balance. That is, we have to wait. We have very strong stress. That is not good. We have to do the tax return in time. That is my another recommendation to the business owners. Just keep in mind, once we open this GST, we have the responsibility to keep the records to do the tax return and try the emails, check mails, what the issue or what we needed to do in the very short future. Then to avoid any troubles. Once CRA issue a letter in writing, we are in trouble. But I would say this kind of GST HST trouble can be fixed. It's not permanent. We can fix because we need to tax what is the true, what is the actual sale. Then CRA will be, do the reassessment. They will issue the re-NOA, then get the tax amount gone. Just have to spend lots of time. Yeah, it's not good experience. Okay. Okay, this is just a very simple example to know when we have to open this GSPS account. It's just a thing, but I always recommend it's not. We have to wait. We can consider in advance voluntary or something just close. Then we open this GST HST. We don't have to spend a lot of time to calculate how many revenue I have, whether I have two or whether we still have maybe 1 day or 2 days. Don't spend this time. Okay. Okay, here that is a practice of calculated return. We have the GST collect, and we only spend them on office expense. That's 1,000, but for personal charge we have 260. That is not we can claim. It's a pretty easy. Okay. There's a 5-step checklist every reporting period. That is, we have the reporting period monthly or quarterly or annually. We needed to know that it's confirmed registered status, whether, after we call the CRA or call them or register online, they will always issue a writing letter to let you know, special for the first time, they will let you know when needed to do the tax return. You need to carefully track the date. It may be not annual or monthly or quarterly because that is the first time. We need to remember the date and do the tax return for the request. Okay. Then classify each revenue stream and apply the correct rate. That is, when we issue the invoice, we always, that is when have the accounting software, we can, set up the tax return. And after that, every time we issue an invoice, we can apply this tax return. That's good. We don't need to spend lots of time to remember, Ontario, that's 13, maybe Quebec is a different one. No, we don't have to spend lots of time. That is accounting software setup. It's also very important for business owner. At the beginning, we have to spend lots of time, but in the future, we just enjoy issue invoice. Okay, enjoy. Okay. Okay, I don't want to repeat. That is the reporting period that we need to keep in mind. Okay. And okay, I think I have introduced all the main topics on the GST HST, that is voluntary or mandatory resist, and what is the tax rate, and what is the tax return period, what kind of evidence we need to keep, and how we can keep this evidence, and how we can do the accounting records, how we can do the bookkeeping to get the numbers to do the tax return. So that is all the main information I want to share with the business owners. And if you have some question, you can put in the chat. Okay. And in the future, if you have some interesting bookkeeping, I also share something free with you guys. I'm in Sudbury, and I want to contribute to the communications. Yeah. Mm-hmm. Thank you.
Thank you so much, Cathy, for your presentation. And as Cathy was saying, she's open. She will be open to offer a training to small businesses. Is that okay, Cathy? What you said?
Yeah. Sure. Yeah.
Yes, and if you are in need of services, you can either send contact us or straight away contact her, and just say that I'm coming to you on behalf from it's no people who recommended me to you, and she offered the training free of charge.
Thank you. Oh, one thing that is, because this webinar is focused on the general information, I also have some details. For example, that is where when to resist in the timing example, or how there has the CRA phone number and GST HST link and the rate. And if you need this information, you can email me or chat. I can send it to you individually. Mm-hmm.
Yeah. Okay, Cathy, are you going to share your slides with us?
Oh, but I mean, that has very detailed information for the GST HST. If business owner wants this one, they can send an email to me. I can email this details information to them.
Okay, sure. Thank you.
Mm-hmm.
Okay, now it's time for Q&A. If you have any question, you can go ahead and ask Cathy, or you can put them in the chat box. Okay. Let's see. Let me check the chat. Okay. Okay. No questions so far. Okay.
Oh, very good.
Mm-hmm. If there's no question, maybe you will have more question after watching the replay that I'm going to share with you. And you can direct them to me, and I will share the questions with Cathy. Okay. Okay, I think I'm going to go straight to the closing. Thank you, Cathy, for sharing this valuable information with us today. And thank you to everyone who joined us. We'll be sharing the webinar replay and short survey, feedback survey with the participants. And our tax education series continues next Wednesday, August 26th at noon, same time with Cathy. Then she will present the second part, corporate income for income tax essential. Okay. Yeah. Thank you again.
Yeah, thank you.
Okay, and I wish you a wonderful afternoon. Thank you.
Thank you. Bye.
Thank you. Bye.